Hey everybody, welcome back to the channel. I'm Doug the Retirement Guy with all your monthly ETFs. And today we're taking an educated look at what's happening with Bitcoin during the recent market downturn and how investors are using income-based ETFs to navigate the crypto volatility. In this video is not about hype, predictions, or guarantees. It's about understanding the facts and the historical patterns and the tools investors use when volatility strikes. So before we get started, I have to say a huge thank you to all of our Patreon supporters, our YouTube subscribers, and of course our YouTube members, the ones who support the channel. Thank you for your support. This helps keep the channel going, and I appreciate every single one of you. And if you're new here, don't be afraid to hit that subscribe button, tap that bell notification. You don't want to miss any of our educational breakdowns. Now, important notice to all viewers. This video is for educational and informational purposes only. It's not a financial advice or investment advice. Past performance does not guarantee future results. I am not a financial advisor, and nothing in this video should be taken as personal recommendations. Every example shown is strictly educational illustration. All right, let's get into it. The Bitcoin recent crash. Over the past 30 days, Bitcoin has fallen from more than 30% from its recent highs. There's been a sharp increase in fear, rapid sell-off, and a lot of questions about what's coming next. This kind of movement is nothing new in the crypto world. Bitcoin is known for high volatility, and high volatility comes both risk and opportunity. The historical Bitcoin crash patterns. Bitcoin has experienced several major downturns before. Here are the two biggest ones that I did in my research. The 2018 crash, it fell from $19,000 a share to $3,600 a share. That's an 81% decline, ending at the year of $4,200. In 2021, and technically into 2022 crash, it fell from $60,000 to roughly $17,000, a 71% decline, and ended at $21,000 a share. Historically, Bitcoin has always moved in cycles, sharp run-ups, sharp corrections, and periods of recovery. The current downturn fits the same repeating pattern. The volatility as a tool. Now let's drive into something that is really important. Volatility isn't just risk. It can also be a tool. Many investors don't want full exposure to the Bitcoin price swings, so they use income-focused ETFs that track Bitcoin futures, sell covered call options, collect premiums, create a potential income stream from the volatility. These strategies don't eliminate risk, but they can behave differently than holding Bitcoin directly. Understanding BTCI. One of the ETFs that uses this approach is called BTCI. It's the NEOS Bitcoin High Income ETF. This is not a recommendation. This is simply an educational example of how a covered call works. BTCI uses Bitcoin futures, data-driven covered call strategies, monthly option cycles, premium collection for potential income. The goal is to convert Bitcoin's volatility into premium income while still maintaining exposure to price movement. The key metrics that we have found with BTCI is this. The recent analyzed distribution rate is about 37%. 35.75 to be exact. Now, distribution rates can vary over time. Expense ratio was 0.98%. Assets under management were around $814 million. Focus is on recurring potential income from the options premium. Again, this is just an educational point. It's not advice or predictions. How the strategy works with BTCI is this. It's a simplified way to understand a covered call strategy in ETFs. The ETF holds Bitcoin futures. It sells call options. It collects premiums from those options. Those premiums create a potential income stream, but the upside growth is capped when Bitcoin surges. So this means the ETF may go down during crashes, but the income can sometimes cushion that decline. So during downturns, in the recent downturn, BTCI price return was about down 26%. The total return, including distribution, was around 3.8% loss. So Bitcoin itself roughly lost 8.2% of its value. This doesn't mean one is better and worse. It simply shows how distributions can change the total return picture during volatile periods. Every investor has pros and cons. Covered call ETFs reduce the upside but soften the downside depending on market conditions. So now doing a comparison, we're going to do a snapshot for educational purposes. Recently, as Bitcoin has shown a small bounce back, BTCI total return has moved to about 9.6% growth. Comparable funds like Maxi and BAGY were still showing negative returns during the same window. This comparison is simply for educational, not again for recommendations. This demonstrates how covered call ETFs respond differently through the directional Bitcoin products. So understanding the risk and limitations. So understanding this, you have a capped upside. So if Bitcoin jumps sharply, a covered call ETF will not fully capture those gains. The NAV erosion risk. If Bitcoin falls more than the premiums collect, net assets value can still decline. Bitcoin future risk. Futures often behave differently than spot Bitcoin. And the expense ratio, as we talk about, all ETFs charge this fees that affect long-term performance. Always weighing the risk before investing, and always talk to a financial provider. So I want to share with you the strategy plan that I put together for myself personally to show you what I have done. Now this is for educational only. Okay, this is not, again, this is not in any way at all a recommendation. This is just the strategy and the investment plan that I personally took into BTCI during the Bitcoin crash. So I want to share with you the educational illustration of how I personally approached the BTCI during this period. I used a strategic positioning initiation. So I watched the value of the fund to find when would be a good time to jump in. I did some market expectations, anticipating the Bitcoin market decline while seeking the opportunities, and I'm really trying to get the income focus. So again, this is not going to be advice. This is just simply an example of how someone might structure research and get the results. I stepped up and bought 500 shares on November 17th. I bought another 500 shares on November 21st. So you can see the difference in the two prices in the two different purchases. So the total amount spent was $45,905. The current value is approximately $46,190 11 days later. The distributions I received were $1,018, which dramatically helped. I did not expect that as planning. So the total gain about $1,303, or roughly 2.8% so far. Again, this is a real example from my own research approach, and I'm shared strictly for educational awareness. So my total thinking of this is I put it this way. I put in the three goals: a short-term, a medium, and a long-term thinking. The short term is to monitor volatility and understand how the option premiums are behaving. My medium term is to compare the ETF's income to its price movement, and long term is a covered call strategies can sometimes generate consistent income potential, but results vary and are not guaranteed. So overall, I have a long-term look at this, that it could be a potential income producer for myself. So that's today's breakdown on the Bitcoin crash, the historical patterns behind it, and how the income ETFs like BTCI can use volatility in a completely different way than holding Bitcoin directly. So remember, this entire video is for educational. Always work with a licensed professional before making investment decisions. But let me know in the comments, is using the volatility for income a smart idea, or is it too risky? Or does it make sense for certain investors? I'd love to hear your thoughts. I stepped into this. I have put a big investment into it. And I'm kind of seeing, can we make the smart idea out of this? Let me know.
Thank you for watching. Press the like